over that 250 years, we're now at a point where 8.5% of the world is living in poverty. People are sadder, more anxious, and more disconnected than they've basically ever been at a time of the greatest material prosperity that the world has ever known.
Welcome to the Zacc Call Money Education Channel. Today is a little different. Normally, we're doing the guided path where we are walking you through a specific topic piece by piece. Sometimes we'll bring on an expert here who has knowledge in a very specific area, and I'm hoping to fire a bunch of questions and help you all get a little bit better with money with a very specific focus. Today, it is behavioral finance. So we have Dr. Daniel Crosby with us. He is a psychologist and behavioral finance expert. So he's written a book called The Soul of Wealth, and Dr. Crosby, we're really putting you to work today, because we had you with our advisors earlier today. We're doing this recording on the channel, and then tonight, a client event. Expect to have a couple hundred people there, and 3 different topics too. It would have been nice of us to say, hey, could you cover one thing?
It's nice to be needed.
Yeah. Okay, that's awesome. So, of course, these topics we'll talk about today are educational in nature, and you want to be thinking about your own specific situation as we dive deeper into these and how they might apply to you. And then, of course, if anybody wants to talk to us directly about that, feel free to reach out. So my thought today was I'd ask you a few questions specifically around topics that you've written about in the book. Mm-hmm. And the goal really is by the time we're done today, anybody listening or watching has a better understanding of how to make decisions in their life around money. And I'm just going to set the stage here real quick with the studies show, at least from what I can see, that people make more money if they are better with their own behavior around finances, that impacts their wealth more than a particular tax strategy or a particular stock or bond investment or something like that. Is that right? Are you feeling and seeing the same thing?
That is right. So when in 2016, there was a meta-analysis of all the ways that financial advisors add value to their clients' lives. And there was some good news and some great news. The good news was that every single part of an advisor's day is additive to the lives of her clients, right? Whether it's tax alpha or asset allocation or product selection, that all adds value. But the thing that added the most value by an order of magnitude, about 7.5 times as much as like stock selection, was keeping that client out of their own way, keeping them from making poor behavioral decisions, keeping them from being emotional or impulsive. So I think a lot of people engage the services of a financial professional ostensibly to get help putting a portfolio together. There's value there. There's more value in having them help you stick with it.
So it's so fascinating to me, and I'm going to be a little selfish and ask the question I want to ask that's not even on here, which is, it also shows that people don't want to be told that they need help managing their decisions or their behavior. So there's a disconnect there, that if that's really what adds value from a financial advisor, but we almost can't tell anybody like, hey, by the way, one of the best ways we help you is help you from you. That's a problem.
Well, it's interesting. So I have 3 kids, and they're all a little too old for this now. But when they were younger, I used to sort of hide their vegetables. I'd make some broccoli brownies or some black bean brownies or something like that and try and sneak them in. And we find that we have to do that a little bit because studies that ask clients like, hey, do you want someone to help you manage your emotions around money? Universally say no. That's not something that I'm looking for because it positions people as excessively emotional or impulsive. But when they say, what's the number one thing you get out of working with an advisor, they'll say things like helping me articulate and reach my goals. Well, managing your emotions is the surest path to that thing. It needs a little bit of branding work because no one understandably likes to be told that they're irrational or silly or short-sighted. So we as a profession have a little bit of marketing shine to put on the whole thing to help speak the language of the people that we serve.
Interesting. Okay, so I'm going to hit a few topics that you can help really take what you've written in the book and bring it to the general public's understanding. So let's talk about true wealth. How do you define true wealth, and why is it important to look beyond a particular number or financial metric?
A couple of stats led me to write the book. We're coming up on 250 years as a country. And when our country was founded nearly 250 years ago, 85% of the world was living in poverty. So that is $2 or less a day in today's dollars. That is back-breaking, shocking poverty everywhere. Almost everyone everywhere was poor. Over that 250 years, we're now at a point where 8.5% of the world is living in poverty, which is still too high, but it is an incredible explosion of the middle class and an explosion of worldwide wealth over that time period. So you would think that our well-being and our happiness would have had a commensurate uptick over that time. That's not what we see at all. People are sadder, more anxious, and more disconnected than they've basically ever been at a time of the greatest material prosperity that the world has ever known. So we have to dig a little bit deeper and look for wealth, to define wealth in more fundamental ways. In chapter 1 of my book, I talk about research from the positive psychology movement that really looks at 5 predictors of true wealth. One is fun and leisure. The second one is hard work, which we don't normally associate with being happy. But yes, deep, engaging hard work is part of what it means to live a rich life. The third and the most important is strong relationships. The fourth was meaning, working for something bigger than yourself, a cause or a purpose bigger than yourself. And the fifth was achievement or advancement, growing, self-improvement, being better than you were yesterday. If you think about those 5 things and you think about the way that most people prepare for retirement, they're really heavy on that first one. They want to make sure they have enough money to play golf or vacation or visit the grandkids. And that's great. That's part of a good life and a rich life. But we don't often give much thought to things like work or self-improvement or relationships or purpose. And so I think we need a broader, more substantive definition of what it means to be wealthy and help our clients achieve that holistic wealth.
Interesting. So the traditional definition of wealth is numerical, and it is that, and it ties to the first one you mentioned of leisure, because it's much easier to measure, like, I have enough money to golf, I have enough money to do these things, and have enough time in retirement maybe to do those things. But I guess you're seeing that the other 4 are missed. I do see that quite a bit with retirees as well, who transition in to retirement. And sometimes there's a spouse who's been at home, who has purpose, who's figured out how to live without a job maybe.
Right.
And the spouse who hasn't figured out how to live without the job comes home and drives that one crazy.
Yeah.
Yeah. And we actually had a client call us in a very hushed tone and was like, he's still here. What do I do about it? So it's tough, right? So you're saying that is your advice or counsel that you should make sure that you could identify a method of achieving wealth in all 5 of those categories? Is that the idea?
It is. And those areas will be of different consequence to you at different parts of your life. Sometimes one area will be more important to you than another, and that's fine. But we all need all 5, and there needs to be some level of balance there. And there can be some conversation about how money can help you reach all those things. I mean, money can send you back to school, could get you training, can help you take a trip with your spouse or your kids. Like, all of those things are purpose. We really over-index on the fun, and money is great at that. Like, money is great at helping you have fun, but there's more to true wealth than just leisure and time.
Got it. The best financial advisors, what do they do to assist in this identification and alignment of wealth and purpose?
Well, they help people understand that it's more than numerical wealth. because we have a marketing industrial complex that would lead you to believe that, Coca-Cola or Nike or whatever is the thing that's going to make you happy. I mean, there's a big machine pushing you to think that consumption and money are the things that will make you happy. I think the best advisors help people understand that it's bigger than just the number, but also they provide them some concreteness. That's why I put that 5-part system in the first chapter of the book, because I think most people have sort of a fundamental or an innate understanding that true wealth is more than money, but they're like not sure what that looks like. And so we need something to fill that void.
Got it. So it's a framework because they're not sure how it actually gets implemented. Gives you a little bit of a framework.
Yep.
Okay, this goes along with the second category to cover here, which has to do with purposeful spending. Okay, so having that framework allows someone to maybe better understand how to increase their happiness and be more wealthy and more than just the numerical value in the brokerage account, for example. So talk to us about purposeful spending, which is something you cover. I'd love to hear some examples because you talked about how an advisor can provide concrete ideas and solutions and ways to go about it. So let's talk about some examples of how aligning spending with personal values can increase happiness.
Let's tackle this. I love this question. So let's tackle this from a couple of different angles. One thing that we know is that people who name their dollars make better decisions. So this is fascinating. It was from a study I cite in the book where people who looked at a picture of their children before making a financial decision saved more than twice as much as a control group. We also see that in another study, people who had named their accounts, so, Daniel's Retire to Park City Fund versus Daniel Fund ABC 123, were dramatically less likely to panic and go to cash in a bear market. So there is some sort of magic to tying your purpose and your values to your money just in terms of your behavior, which, as we've discussed, is very important. There's also some magic in the way that you spend it. I'll give the example of cars. When we look at people who have a windfall, people who make some money, buying a car is usually high on most people's list. Cars are, of course, very expensive, and they don't, on average, buy you a lot of happiness. There is, however, a notable exception to that rule, and it's people who buy a car to join a car club. If you buy the Porsche to join the Porsche Club of Salt Lake City, then you actually experience an enduring and incredibly high uptick in happiness that lasts for a very long time. So you can use consumerism as an entree to a relationship, which is the best predictor of happiness. The final thing I'll say about purposeful spending is you can create more of the world that you want to live in. There's a chapter in the book where I talk about this. If you look at social movements through the ages, if you look at the civil rights movement in my part of the world in the Deep South, right, in the 50s and 60s, things like bus boycotts, things like lunch counter sit-ins, these are financial levers to bring about social change. If you look about how apartheid was brought to its knees, it was by divesting of diamond businesses and boycotting South African teams in international sporting events. On a smaller level, whether or not you choose to buy fair trade coffee or buy organic or support, the local charity or shop at the farmer's market or spend local or shop small, all of these things bring about more of the world that you want to live in. So meaning is so integrated into our financial lives. You can make the world better, you can make your financial behavior better, and you can make yourself happier.
Interesting. So it's meaning in the input around what you're saving for, like the children, looking at the picture of the children, meaning in the input, and there's also meaning in the outcome, which was the spending money in local and small and building that world around you, which is really fascinating.
Yeah.
Okay, Dr. Crosby, so you talked about the purchase of the Porsche itself is not what gave that person the happiness. It's the additional relationships and the deepening of those relationships through the club. Am I reading into that right, that it's really the relationships that produce the happiness in the end?
Yeah.
The money was an a tool to get to the relationship?
It's a framing, right? Like it's the framing of it, because I think a lot of people buy a Porsche to, stunt on their neighbors or to show people that they made it. And if that's your motivation, cars are subject to chaos and entropy and decay. And mostly what a car does when you buy it is break and get worse and get dinged in the Target parking lot and, whatever, right? That's mostly what it does. So if you're buying it as a shiny toy to be better than other people, there's always going to be a more expensive car. Your car immediately starts getting older and less valuable. And so if that is your end aim, that's sort of a losing battle. If your aim is connection, right, it can be very good for that, because now you get a bunch of gearheads who love to talk about the same thing you do. You have a place to go on Saturday morning. You have a new set of friends, and you have people who share your interests. So relationships are the quickest path to a good life. Deep relationships are. And so if a consumer purchase is an entree to that world, then maybe it's a good one.
Got it. Would you say that relationships are that gateway to a fulfilling life, even if you're talking to, obviously the extrovert feels that way and would even self-identify that way.
Mm-hmm.
What about the introvert? Because somebody watching a finance channel on YouTube might call themselves an introvert, Are they still benefiting the same amount?
Yeah, they are. So introverts need relationships just as much as extroverts. In fact, a lot of the original research on introversion and extroversion is not around the importance of relationships. It's on whether relationships sort of charge or drain your battery. Introverts need relationships. Introverts can be enormously socially skilled. They just may need a little break after a cocktail party. So they definitely need them just as much as the next person.
Okay, so it seems like most of the ideas that we're talking about here are probably intuitive. We think they're intuitive once you articulate them so clearly. We're like, oh yeah, I knew that, but we really didn't have the framework to even articulate it ourselves, right? So we get this wonderful framework from you, and yet we make cognitive behavioral mistakes. So it seems like there are biases, cognitive biases, that push us to make decisions, and it's almost instinctive rather than objective in how we go about making, especially money decisions, feel like they're very instinctive. So I'd love to hear, you cover a lot on cognitive biases that affect our decision making. What cognitive biases could you help surface for us, bring them to our conscious awareness, and help us work through?
So some of the work of mine that I'm most proud of was taking the universe of biases, and there are roughly 200 now that impact the way that we do our work and the way that we spend our money. And I looked at those and I grouped them without any preconception about like how many sort of meta biases there were. I looked at them and I looked at the way we spend money, spend, save, and invest. And I said, look, there's some subset of these that are sort of the big ones, and they account for a lot of these smaller biases. And there really were 4 that I walked away with. The first was ego. Ego is the various forms of overconfidence. It's this tendency to have a belief that you're better than someone, or smarter, faster, stronger. It's also the belief that we're luckier than average, that bad things happen to people. Like people get cancer, but I don't get cancer. People can go bankrupt, but I don't go bankrupt. And also that we're more prescient about the future than we are. Those are the various forms of ego. The second of these is emotion, the tendency to confuse our heart with our head. I did research that shows that emotion, we are more emotional about money than anything else. And, brain scans show more than sex, death, politics, religion, anything else. Money is the thing with the greatest excitatory power. Money is absolutely an emotional construct. So ego, then emotion. The third is attention. This is confusing things that are loud with things that are likely. We saw this in the wake of 9/11. Every year we remember and rightly mourn the 3,000 people that we lost in 9/11. But there were other attendant tragedies, like thousands more people died that year in the remaining months of that year because they failed to fly. People were scared to fly, and so they were driving everywhere. Well, a terrorist attack on an airplane is loud, but it's not likely. Getting in a car accident is not loud, but it is likely. And so people were taking the statistically more dangerous path to avoid the more attention-seeking, higher headline risk sort of thing. So attention is this third one. And then the final one is conservatism, which is the various forms of being status quo prone, sort of wed to things that we know, and fearful of taking risk. Humankind hates uncertainty, it hates risk taking, and we really like the things that we know and that we're familiar with. And we often confuse the things that we know with things that are good or right or safe.
It seems like with investors in particular, technology that they grew up with or that they experienced through their 20s and 30s is acceptable. But technology that gets added after they're 50 or 60, it's like, I don't know where this is coming from. That's not right.
It's fascinating. We're lucky in the U.S. because we have such big capital markets. But I lived in Canada for a time. Canada reflects about 4% of the world stock market is Canadian. But the average Canadian has a better than 80% allocation to Canadian stocks. And so that's dangerous, right? Because you end up being overweight maple syrup and logging and things like that. So people just confuse the things that they know with the things that are safe. We see that within the U.S. People on the West Coast are overweight tech stocks. People in the Northeast are overweight financials. People in the Midwest are overweight agricultural stocks. We see this all over the place, that people confuse the things that they grew up with or the things that they know with the things that are safe or right or good. And actually, if you live in Kansas, you shouldn't be overweight ag stocks because, your home value is contingent on the agricultural industry.
Maybe your job.
Your job might be contingent. So people should be running in the other direction and embracing newness and variety. And that's not how most people do it, though.
So do you mind giving us the short version of those four again? You said ego?
Yeah, ego is overconfidence. Emotion, confusing your feelings with the facts. Attention is attending to things that are loud or dramatic, but not likely. And then finally, conservatism is just trying to play it safe and not taking risk.
Could you give us an example? I really, because sometimes people, you're just so smart, you know this stuff so well that I think in your head you're like, yeah, ego is when this happens and emotion is when this happened. Can you give us maybe one or two examples of one or two of those categories that would be like, you as a person are doing this, thinking this, but should be thinking that?
Yeah. So ego is a great one, right? So most people with even just a fundamental understanding of how markets work know that things like being long-term, being patient, and being diversified are first principles and good ideas from investing. Doesn't take much to grasp that. However, you will meet very many people who are not doing those things in their own portfolio because they know different, right? That's a form.
They know better.
They know better. Right?
Yeah.
They know better. That's a form of ego, right? Like, yeah, I understand that I should be diversified or that people should be diversified. But I'm cool being overweight, 55% Apple stock because I know a guy who knows a guy, or I know the tech industry, or, whatever. So thinking the rules don't apply to you, I think, is the most common form of overconfidence. And it's pretty insidious and it's easy to let it go because it's, I should have said this earlier. The reason bias is so hard to shake is because it serves us very well in other parts of our lives. In many parts of your life, making an emotional decision is the right decision, right? In many parts of your life, we're very good at ascertaining whether or not a person is trustworthy. If you go on a date with a person and you get the creeps and you don't think that you have an emotional negative reaction to them, they're probably a creep. You should probably not speak to them again. But that's a domain where we have expertise. We've met lots of people. We get lots of feedback about the type of people they are. The average person doesn't have a great deal of experience making financial decisions, getting the feedback, assessing it over a long time frame. There are places where all of these biases serve us well. Overconfidence, right? I like to eat out. Every time someone opens a restaurant, it is an act of brazen overconfidence. I mean, most restaurants fail. I mean, restaurants fail at a better than 90% clip in the first 3 years. And yet we're glad that people start restaurants, right? When I talked to my wife and asked her on a date, that was an act of overconfidence, but I'm glad I did it, right? So there's many places where overconfidence serves us. We just got to divorce it from our financial lives.
Interesting. That's a great example. In this same category, around happiness and behavior, you talk a bit about when you align your spending with your personal values and in particular contribute to other people's well-being, it can lead to greater happiness than spending money on yourself. Can you expand on that a little bit for us?
Yeah, when people are asked whether spending money on buying themselves a treat or being generous would buy them more happiness, people overwhelmingly think that buying themselves some little something is going to be the thing that makes them happier. It is not the case. Children as young as 2 show this warm glow of generosity. This is something deeply human and deeply innate in us, that helping others and blessing the lives of others makes us happy. Charitable endeavors, philanthropy make us happy. And one of the things that I wanted to do when I wrote the book was writing a book is very hard and pays very poorly. And so I wanted to make sure that if I was going to do this crazy thing, that it had some staying power. And so I looked for ideas that were backed by the science, backed by philosophy, backed by faith traditions. And this idea that giving money away makes your own life richer is in every religion, every philosophy, every scientific journal across time, and in every corner of the earth. I mean, it's just part of who we are. And when you look at the research on felt wealth, there's a couple of areas where there is a practical reality and what I'll call a soulful reality. Past a certain number, there's no sort of blood test for whether or not someone is wealthy. At some point, it sort of comes down to, do you feel rich? And when we look at whether or not people feel rich, there are 2 variables that predict that with equal certainty, and they both need to be there in tandem for it to work. One is, do they have money? Like their level of wealth, right? That's a practical reality. You need some level of wealth to feel wealthy. Okay. Fair enough. The second reality, though, is, are you generous? We have people in the 95th, 98th, 99th percentile for wealth in the richest country in the history of the world, who do not feel wealthy because they are not generous. So you need both to secure the bag and have some amount of money, but also to share that wealth and send the ladder back down if you're going to feel wealthy.
And you're saying those people are wealthy by any objective standard. Anybody else would say this person's wealthy.
Yeah.
But they won't feel wealthy until they're willing to start giving some of it away, or at least impacting others with it.
Yeah.
Is that what you're saying?
It goes back to that early definition. Numerically, they are wealthy. Statistically, they are wealthy. But if you ask them, they do not feel wealthy. And so it's kind of all for naught. I mean, if you're at the 99th percentile of wealth, but you don't feel rich, like what are you
doing?
Yeah, what are you doing? So that
interesting.
There's many such cases, though.
Okay, and then so I've got 2 more topics for you, and this has been so helpful. So along those same lines around feeling wealthy, you hit the idea of comparison and contentment pretty hard in the book. And this one's one that we all know, the keeping up with the Joneses. It feels like we all know this, but what is it that we don't know, that the most of us don't know about comparison and contentment?
Well, so I'm going to get a little bit philosophical on you here. The reason this one is so hard to shake is because this is literally what humankind does best. When you look at the animal kingdom of which we are a part, we are not fast. We're not strong. We don't have sharp claws or cool fur. Like, we just don't do any of those things well. We're not physically imposing. What we do well is we work together. So we are wired in a very real sense to look at our fellow man and our fellow woman and see how they're doing, see how we can contribute, see how we can help them, see how they can help us, because that's what makes humankind great. So this is not just some passing thing with us. This is fundamentally who we are as a species, is a comparative species. Now, that being said, we have to be thoughtful about making good comparisons, because when you dig into the research, you find a couple of things. First, you find that people at extremes of low levels and high levels of wealth are much less happy than people in middle income levels. And that's because they're able to make more balanced comparisons. People in the middle income, middle wealth levels are able to look at a great many people and say, wow, they're not doing as well as I am, and I'm lucky. And they're also able to look up and say, oh wow, well, they're doing better than I am, and that's something to strive for. We find that people at the tail ends of the wealth spectrum tend to make bad comparisons, and they tend to either be very jealous or very disdainful relative to people in middle income levels. Again, one of these soulful realities, we find that your chosen reference class is the best predictor of your financial contentment. It's a better predictor of how financially contented you are than how much money you have, is who you are comparing yourself to. And unless you're, whoever, Elon Musk or whoever it is today, there is always someone that's richer than you, and by quite a bit. And so if you pick the wrong reference class, it is a recipe for misery. And it's very easy to pick the wrong reference class now. For most of human history, you would have lived around 150 people that you knew that their lives looked kind of like yours, and you compared yourself to people in your orbit. Now I can get on Instagram as soon as we get done here, and I can go look at the person with the most money and the coolest car and the best hair and the best abs and the prettiest family and whatever, and I can benchmark my life to theirs. And if we do that, that's a recipe for dissatisfaction and sadness.
When we do a retirement plan for someone, I can run into two financial situations that are similar. Maybe they both have $100,000 of income in retirement. Mm-hmm. They both have $1 million of wealth. Whatever the numbers may be. This person hangs out with people who have $5 and $10 million, and this person hangs out with people who have $500,000 each. Mm-hmm. And I can tell you immediately, this person's going to be successful, because they're not going to be put in environments in which they feel like they have to pick up a really expensive check at a really expensive restaurant, an overstretch on the vehicle, on everything. It is so real, this comparison benchmark that you're talking about for each. We talk to retirees a lot, but for each retiree, I can tell. Sometimes, in fact, this last week I was talking to someone and happened to know some of the people that they tend to spend time with. Mm-hmm. I also happened to know their financial situation, and I thought, I think it'd be good. I didn't say this out loud, but I'm thinking you should stop hanging out with the Smiths and the Jones and with the, making up names here. It'd be financially healthy for you to not do that anymore. It's tough.
It really is. I grew up in Alabama in a place that is very highly educated and cares a lot, but is also very middle class. Like big focus on intelligence, but also sort of everyone's sort of middle class. And when I go home, it's a very different vibe than when I am in my neighborhood in Atlanta with professional athletes. And, they're two very different places. The impact it has on me is very different. And people would really be wise to consider that. I consider it the worst financial decision I've ever made, was upgrading to a house that I can totally afford, but that puts me in an orbit with people who have more than me and that I find myself comparing myself to.
Yeah, I had to distance myself from someone. Basically, I was finding myself in circles where everyone had sold a business for $100 million or more. Mm-hmm. And that's not me. I'm still building, and I'm still working, and that business may not get you know what I mean? And I found myself feeling less than when I realized I was plenty fine. You know, I was doing great. Family's fine. We can afford the kids' activities and go on family vacations.
Yeah.
We're good. It was an interesting realization. I had to pull myself out of a social group on purpose because there was no reason for me to feel poor, and I did.
It's something that more people should do, though. To be thoughtful about your reference class is a much easier way to feel rich than making a lot more money.
A lot more.
You know, to just be thoughtful. And it goes down to social media too. Curate the type of accounts you choose to follow on social media and who you refer your life next to.
So good. Okay, last topic has to do with health and wealth. There's a connection there that you draw that I think a lot of us tend to think about, oh, I see my doctors, I'm healthy in this way or not healthy in this way, and then I've got this separate financial balance sheet health, but they're more connected than probably people realize. What can you teach us about that?
Yeah, it's a big reason why I wrote the book. I had a health scare that ended up being nothing, but for a minute there, I was in a lot of pain and I couldn't figure out what was wrong with me. And there was a moment, it ended up being a bad dental problem. There was a moment when my wife was driving me to the hospital and I'm in the front seat and I'm crying and I think I have a brain tumor or something. And she's driving me to the hospital. And I said to her, I would give it all up, meaning money, right? I would give it all up for answers to this. Like I would give it all up to just know what the heck is wrong with me and for answers to this. And then when I finally figured out what was wrong with me and got relief from the pain, I said, wow, there was a moment there where all the stuff that I write about and think about because I work in finance was really immaterial to me. And what is this? And so it put me down this path. But what I found while researching this path is that taking care of our health can really impact our wealth in positive ways. And one of these is our mental health. I'm a reformed psychotherapist. I'm a doctor of psychology. And it was fascinating for me to find that people who go to therapy tend to make 10% more than their same education peers. And this is
talking financially?
Yeah. Their salaries tend to be 10% higher than their same education peers. And you think about the modern workforce. Your EQ, your ability to get along with people and be a social animal, is a better predictor, we know definitively now, than your IQ in the modern workplace, right? Especially in the age of AI, knowledge is commoditized, but we need people who are good with people. And people who go to therapy learn skills like stress management and communication and things like that materially impact their wealth. So something like going to therapy and working on yourself can have a real material dollars and cents impact on your bottom line. People who work out 3 days a week or more make more than those who don't. People who are fit make more than those who aren't and spend less on medical care. So there's all of these places where taking care of yourself is really directly, indirectly something that can help you make more money and has ancillary benefits as well. So I think a lot of times when people think about how could I up my game, they want to say, oh, I'm going to get better at, picking the next hot dot or seeing what the next tech stock is or seeing the next crypto to rip or something like that. They don't usually think I should go to the gym or learn how to be kinder to my spouse. But those things have a powerful impact.
To the tune of 10% on the therapy one.
12,
and maybe
12 for guys. Guys are crazy.
Oh, is that right?
Guys are crazier. It's eight for women. It's 8.
That's the average. The men are pushing it up.
It's 8 for women and 12 for men.
Oh my gosh.
Yeah.
Okay. Before we need to talk about your book. Where do people find it? All of that. I do want to know, at this stage in your life, if you could rewind 20 years, what are you telling your 20-year-old self or 20 years ago self, let's call it? I don't know how old you are today. Mm-hmm. But from 20 years ago, related to all of these topics, what do you wish you knew back then?
Yeah, I think the idea that enough is a moving target. There have, at various points in my life, I've had a number. Like this is the number, or this is the number I need to be happy, or this is the number I need to feel secure. And, in some cases I've passed those numbers and it
didn't mean as much.
Didn't mean a thing. Like, in fact, it's like when you get there, it doesn't mean a thing. So I think if I had expanded out my purview of what a meaningful life was, and that balanced life across those 5 domains that we talked about earlier, if I had learned that earlier, I think I'd be better off. And it's something, even me, I write books on this stuff, and I constantly have to remind myself. Because again, there's a lot of voices telling you that money is the thing, and you have to drown them out with something bigger than that. And so, yeah, if I had learned that lesson that money is a moving target and wealth is more than a dollar figure, I would have been better off.
That's it. Okay, I'm going to make you anticipate 20 years in the future. Imagine we're having the same conversation 20 years in the future. What is Dr. Crosby 20 years from now telling Dr. Crosby today that you should be thinking about?
So, that's a great one. So, what I want to do with my life is put good ideas in the world and be good to the 4 people in my family. That to me is kind of the best you can do. When you look at a life, I think ideas are the most enduring thing. If I can continue to write and put good ideas in the world that make the world a better place, and if if my wife and my 3 kids love me in 20 years, then I will have done it right.
Feeling pretty good about it. That's awesome. Okay, The Soul of Wealth. Where is it found?
Go make Jeff Bezos some money. I mean, go get it. Go on Amazon. Anywhere fine books are sold. But yeah.
Okay. Yeah. But Dr. Daniel Crosby, The Soul of Wealth, can be found on Amazon, or you can just Google that. You're going to find it. And works with Orion, which is a larger risk and wealth management firm and technology-based wealth management. We use Orion. That's part of our relationship, is having that connection. And we like what Orion does. We like their software and their tools and their team. I think that's about it. But the bottom line is, I hope you have learned a lot about the way you are thinking about money, and maybe a couple things that you could adjust, a couple things you can tweak in how you're thinking about money, because how you think about money, I like to talk about all the nerdy stuff. Like, I'll get on here and talk about Social Security break-evens and the math being just right. And the comments are, I'm going back and forth in the comments with people about how they think about Roth versus traditional. And it matters, but it doesn't as much as what you're talking about. So just realize what really matters here. I appreciate you joining. Of course, if you're wanting to get more of this type of information, we changed the color of the background. So when you're seeing the different videos on the channel, interviews and more direct-to-camera stuff will be more like this color. The blue is the guided path, which walks you through different topics, episode by episode. Thank you for watching. Like and subscribe.